Greetings from the Swing Trading Bunker. I'm your host, Jason, and we're going to go over my portfolio tonight. Maybe talk a little bit about my risk management. I did add one new position today, which maxed out my risk for the week, and let's get started. Well, the first asset we have is OKLO. It's a utility sector, and how I got into this one is basically my bullish order flow scan that I usually trade against. My main strategy is to sell put credit spreads, and here's one. This actually has been the full circle of the put credit spread wheel that I trade. I actually started off with this one, wound up having it went below my strikes, my short strike, and I wind up having to go out in time, kind of a 6-month leap, and buy a call option at the money, and then start selling calls against that until we got back over that, which happened about 2 weeks ago when the whole market took back off. So basically, I'm up $37 over how many different put credit spreads since I started this campaign, as well as this calls against it. And last week I closed that out, closed the call that I bought, as well as the call I was short, which was this trade right here, and then went ahead for this week, sold another put spread. So we're not in the money yet, but we're right at it. The pullback today, down 5, we're back at 62, so we're right back on the short strike. So we may have to go back to buying our put out, or buying our call out in time, and then selling calls until the market keeps going up. So anyway, that's where we are on that one. IGV, that one is a software ETF that I sold options in. Like I said, once again, a put credit spread. Basically, that sector is probably got hit the hardest when we had this downturn and in the market. And basically, when the market rebound, that's the one sector that kind of lagged. So my theory was that it's going to pick up. So I went ahead and started selling calls, credit spreads in that sector. You can see that I've got 3 positions in the software sector for that one. But this one's been doing pretty good. It moved up. It moved up over the last week, and today, of course, it sold off, but it didn't sell off as much as everything else. And we got in at, what's our short strike on that one? At 83, so we closed at 86. So we got a good cushion. I always like to go in and look to see where we're setting at and see where our delta's at. So right now our delta is about 11. So that kind of gives us about a 90% chance that we'll stay above that and close that one out for a profit. So that's the swing trade for that one. For that expires this week, I believe. Let's check. 3 days. So this one, I also sell put credit spreads for bi-weekly as well as monthly. I kind of use the Tasty Trade system to manage those, but not on the weeklies. The weeklies is more of well, I don't want to say income because there's nothing guaranteed. The only way to get guaranteed income is a job, a job. So what we're trying to do is just try to generate. I have a goal for how much money I'd like to generate on my portfolio, and that's the premium that I sell to try to get to that. And we're doing pretty good this year, but we can go over that at another time. So my next position is Microsoft. Once again, in the software sector, I think they've got hit the hardest. And Microsoft actually, for the last couple of days, has really tried to break out and close this gap right here. We had a good breakout about 3 days ago. Today we kind of pulled, or yesterday we kind of pulled back, but today we pushed over that and closed above the high of that day. So that's a pretty good sign. I'm short the 422, so we closed a couple points above that. And what's our but we're right at, we got a 60% chance of not closing in our near our strike, our short strike. One thing about this one though is this putting on one that against this one, we've got earnings in about 8 days. That's what this stands for right here. Excuse me. And my option close or expires. Oh, where was that? There it is. Days open, expires. That's earnings. Where's my expiration? I miss it. I missed it. Days to expire. Yeah, that is 6 days. So 6 days, and our earnings is 8 days. So this one should expire before we get to earnings. Hopefully, we'll expire out of the money, and we'll see a market push. Oh, that's what you're always betting for, is that you get a winner. But you know, the next position I have is Walmart. Walmart's been a pretty good moneymaker this year. The chains come up. I've been selling put credit spreads against this one, pulling about 40s and 60s. That one's been just going straight up since the market turned over about 2 weeks ago. That's been pretty good. Actually, it started a little bit earlier. It's one of the staples in that sector. Services, grocery, yeah. So that was a good trade. That's a good stock I've been riding. And they don't have earnings for a week, and I believe this one is a monthly. Let's see how many days till expiration. Yeah, 24. So this one with the Tasty Mechanics, we'll have to reassess this one in a couple days. Maybe roll it out in time. I just don't want to really roll into earnings, so we'll see. Maybe we'll close that one out for our 50%, where we're 26 right now. This one is a different trade. It is a put credit, not a spread. It's just a regular put. And what we're doing here is we're trying. They're on the weekly chart for this one. This thing has been getting hammered, and it's down to its lowest since 2008. And I went ahead and put a position on, thinking that's definitely a level that we might start finding some support. So I started selling puts against that one. It's General Mills, thinking that one's going to bounce back eventually. But we'll see. We'll see on that one. But I think we've rolled once, and we'll probably, like I said, in about 3 days, we'll roll that one out again. I don't think we'll be able to roll it down for a credit, but we should be able to roll it out at the same strike for a small credit. So next, if not, we get assigned, it's a possibility, then we'll own 100 shares of it, and then we'll go out and sell calls against that. The standard wheel as a wheel strategy, as opposed to the option wheel strategy that I'd use on most of my trades. Palantir, that's one again. That's the software sector. They've been hit pretty hard. Palantir's like down from 150 or something. It was earlier last year, sometime last year. Yeah, 200. Wow. So it's been hit pretty good. But we got a good bounce when the market turned around last week, and so I went ahead and added that. This is one of my favorite stocks to trade. So we were up a little bit today, but like I said, it looked like it pulled back today. Yeah, we got a red, but we stayed in that range. Staying in that range is good. We like that. And if we look, it's one of the monthlies. We're around 28. I usually put them on around 22 to 25 delta, where I put my credit spreads. A lot of times I go try to get a 5, but if I can get a shorter one, like this one was 5 wide. A lot of times I try to get 3, depending on the risk and how many different stocks I have in that sector. I'll usually, that's how I manage my risk, so I'm not too focused in one sector. So that way, if one sector starts going down, not all your whole profile doesn't go down. So we can talk about that kind of stuff later. Oracle is the position I put on today. I sold that. It's even further out. I think that it's because their earnings is not till next month. Yeah, their earnings are 50 days out. So I went ahead and got it now. Hopefully we'll get an earnings run. Um, Technology got hit pretty hard this month or this year, just like everything else. But they're starting to bounce back as well. So I'm kind of hoping to ride that tide for that position. And we were up positive numbers until it looks like everything's sold off of the close. So, but hopefully we'll try to milk that one and try to get our 50%. But anyway, that's the portfolio. It's doing pretty good. I think I'm in some pretty good stocks for right now. Definitely pretty diversified. A little bit too focused in software. I've got 3 positions on that one. A little more risk than I should have. I should only have 5 units in that, and I think I'm a little bit over that with what I've got. But all in all, and how I assess my risk, like my portfolio is small. Probably got about 13,000 in the account. And what I do is I trade the put credit spread wheel strategy. So if we go through and set up and sell a put, and I can walk through one of my trades. Like let's go through the Oracle trade today. What I like to do is, so this would be a $5 wide one here. I look for the 21, so it's about where we're at right now. And I think I did that wrong. Yeah, we would short and then call that one. So we're about 130 credit. I think Tasty tries to get a third of the width, which is a little bit low on that one, probably because the IV is not very high. Let's see what the IVR is. About 51. So you like a little bit higher to get a little more premium out of that. But I also trade. I pick stocks. I'm not really a contrarian. I don't really run with stocks that are going the opposite direction looking for a bounce unless it's already in a bullish trend and it's pulling back to a support level. Then I will play maybe what looks contrarian, but that's really bullish structure. Then I would sell a put spread underneath where that support is. But right now, Oracle, it was kind of on a breakout, so I went ahead and traded that one. But basically, I sell put credit spreads. Now, how I manage my risk or assess whether I'm putting too much risk into my portfolio, what I usually do is after that, I'll go out about 6 months, which about this 150 here, and I will look at what the at the money call is going for. And so this one, basically, I would say that's 25. So that would be if I had to go out and buy this call, if we get to the point to where we're below my strikes and I've got to close it out and I've got to basically make a synthetic 100 shares. Some people would say it's a poor man's covered call, which most people would say that because that's what it is. I go out about 6 months and I would have to buy that call. So this is how I assess my risk. This would be $2,500 of my $13,000 portfolio. So basically, I've always only using up as much cash as if it would cost me to buy that position and then start selling calls against it. So that's what assess my risk. That's because if you look at I'm only about, for my capital resources, I'm only about 20% of my buying power used. So it looks a little low, but that's not what we're worried about right now. That's just me managing my risk so I don't get overcommitted. And if we do see a downturn in the market, I could still make the call purchases that I need to for my wheel strategy and continue selling calls until the market rebounds. But anyway, well, that's about it for me tonight. I hope you enjoyed the content, and I hope you come back for more. Well, like I said, we probably won't be putting in any new positions this week because I'm at max of my risk. But if some of them get a good bounce tomorrow and we get over our 50%, we'll close them out, and then I'll run my scan, and we'll see what's out there and see if we can put on some more trades. Thank you for hanging out with me tonight, and we'll see you tomorrow. Take care.